Cholamandalam, which is the next management on the show. The loan growth disbursements came in healthy. The net interest margins expanded as well. We have Arul Selvan, the president and CFO of the company, who joins us on the show. Hi, sir. Good morning. Thanks a lot for joining in. Well, give us a couple of data points then, with regard to the disbursement growth. You were indicating that it should pick up in the second half of the year. So what is the outlook now for the year on the whole? And also, what does that mean in terms of AUM growth?
We stick to our original or the earlier, indications. You've seen that happen in Q3. Q3, you saw the disbursement grow by 16%. And just like how the AUM did not move much when the disbursements plateaued, same way, immediately it will not move much. And so AUM remains at the 20% growth levels which we have indicated. It will remain so in Q4 also, while disbursement will pick up in Q4 further. So we see better disbursement numbers in Q4, but it will also not immediately reflect on the AUM. AUM will still grow at the 20 to 20 or 22%, which we had been indicating.
Okay, and the disbursement growth, sir, I missed that number.
So disbursement growth would be similar at around 15 to 16% levels in Q4 as against previous Q4. But overall disbursement growth should be in the range of around 10 to 15%.
Got it, sir. All right. Your NIMs that you've reported, actually, they have increased by close to around 10 basis points. That's something that you were guiding for. It's got a bit of an improvement, I think, in the home loan part of your business as well. What's the outlook with regard to your NIMs from year on? And how do you expect your cost of borrowing to pan out in the coming quarters?
The cost of borrowing could improve further by around 5 or 10 basis points, and that should reflect back into the NIM. We will see the similar levels of NIM levels as we move into Q4, because the shorter end borrowings have sort of tightened, so there has been not that much savings out there, though we don't really do much of the short-term borrowings. So we don't see that impacting. However, we will be cautious about committing further on the NIMs. So we stick to our 5 to 10 basis points improvement in Q4 as compared to Q3.
Got that. Your vehicle finance segment, I was just seeing the internals grew at 17%, which is lower than the overall AUM growth. Can you explain that? Because CV markets seem to be doing very well. So, what is the expectation, particularly on the vehicle finance business?
Vehicle finance will grow better in Q4 from a disbursement perspective, but the reflection of the same on the AUM will still be little muted because it's a very large book. So one quarter disbursement may not shift the AUM growth that much significantly, or instantaneously. So you will see that growth more moving up progressively rather than having a visible impact immediately for a single quarter's move.
And for vehicle finance, what is the disbursement growth that you expect in Q4?
We expect around the same 16 to 20% growth in Q4 because last year Q4 would also be a better quarter. So we do not want to look at it from current quarter versus this next quarter.
Okay. And credit cost was at 1.7%. In Q4, do you expect it to decline?
Yes, it will decline in Q4, and the overall full year credit cost should be in the range of around 1.6%. This is what we have guided earlier also. We stick to that. We will see reduction in the unsecured book happening. You are already seeing that happening in the quarter-over-quarter numbers. So this will further benefit in Q4. And vehicle finance, always Q4 is a good quarter because that is when there is a lot of money with the borrowers because of the harvesting, etc. So that should also augur well for the loan loss numbers. So overall full year, in spite of the first 3 quarters being in the 1.8, 1.7 range, we still see a 10 basis points improvement when we close the full year.
Okay, final question before we let you go, sir. The ROA is currently at around 2.4%. Do you expect it to hold on to these levels? And what are the levers you have in store to see some kind of improvement in the coming fiscal?
So in the coming fiscal, we will see the full year's benefit on the cost of fund happening. The other thing is that the products which we are now growing are of a higher yield, like gold and even CSEL, and even the corrections which we did in SME, etc., should augur well in improving the bottom line, and so that should help us to improve the return on assets. And at a PBT level, I think we should be much closer to the 3.5% pre-tax ROTA levels, which we had always been working towards. And I think we should reach that in FY27.
All right. Sir, you're often compared to Sri Ram, and they've had a massive equity infusion post the partnership with MUFG. I mean, how has it changed the competitive dynamics? They've got a rating upgrade as well. And are you looking at any sort of, a similar partnership or an equity infusion?
No, we are not looking at partnership per se, but over a cycle, as our Tier 1 capital proportion, if it scales down below a threshold which we have set internally, we will certainly be open to taking fresh equity. But at this juncture, we are not looking at any partnership because there is a good amount of promoter interest, and they continue to be, looking at Chola as one of the prime investment or their holdings. So we'll continue to be in that same position.
Okay, all right. Pleasure speaking to you, sir, as always. AUM growth of more than 20%. NIMs could improve by around 5 to 10 basis points from year on. And credit cost comes down to around 1.6%. Appreciate you joining in. Look forward to having a chat with you as the quarter does progress. Well, before we